We're talking about Tesla today on the Investing Markets and Money podcast, and we're going to get the thoughts of our editor and host, Stuart Fieldhouse. Stuart, bearing in mind we're having the conversation on Friday morning on the 25th, and things could change at any moment. What are your thoughts on where we stand with Tesla at the moment?
Oh, thanks, Michael. We thought we'd talk about Tesla largely because it's still one of the favourite stocks certainly amongst UK investors. But it has not been doing well since Trump came into office. We published a note in the first week of March arguing in favour of shorting Tesla. I think we've probably missed a lot of the original decline in the share price that I think was caused by Elon Musk announcing he was going to become involved in as an advisor to the US government on federal spending efficiency. I think in our original note we argued he was taking on a lot of reputational risk. He was taking his eye off the ball with managing Tesla on a day-to-day basis. And also Trump's tariffs are not going to be good news for Tesla. I know that the administration is now backpedaling rapidly from those original Liberation Day tariffs, but I think the damage has been done. I think a lot of uncertainty has crept into the international auto manufacturing market, and Tesla's going to be a victim of that. Since the 7th of March, the share price has been bouncing back and forth. I think the market's trying to make its mind up about Tesla. I think the latest set of results on the auto manufacturing side weren't a huge surprise. We've been seeing huge declines in sales in Europe. There's the tariff war with China to think about. China's still a major market for Tesla. But then Tesla has been making money in other parts of the business as well. But it still looks really expensive. I think you were making an observation earlier, Michael, about the price earnings ratio versus the sector.
Yeah, I mean, I was really surprised by this. So, looking at our data provider, Bridgewise, which people can find a link to, I'll put it on the comments below. The PE ratio for Tesla at the moment, after the Q1 results, is at a staggering 148. Versus the industry average of 15.7. So obviously, as we know, there's there's a huge band of followers for Tesla, and you could argue that there are things that are priced in, that are going to sort of potentially change the game. I know you've got some thoughts on that as well. I sort of refer to robo taxis and the like. And the incredible competition, as you say, from China, which could make a big difference. So it for me, that PE ratio is one for the avid followers. If you're convinced that Elon Musk, now he's sort of focusing back on Tesla, can deliver on sort of these large scale sort of robo taxis, then it could prove to be interesting, and you could be picking up Tesla shares at the moment for a bit of a bargain. But that's high. That's high, right?
A bit of a bargain at 150 times.
Yeah, I'm questioning myself as I'm saying it.
Oh dear, I'd hate to see what expensive looks like.
Yeah.
I mean, if you look at the share price for Tesla since Trump came in, I mean, it was up at about $428. We shorted it at 270. I thought it would drop to under 200. It's currently trading, as we record this, around the 260 mark. That's after the latest set of results. The results themselves, total revenues down 9% year over year. car revenues still 72% of Tesla's overall revenues, but those are down 20% year on year. So it actually was boosted by other stuff than car manufacturing. So you've got battery storage and solar, which have helped the company's bottom line. And then also there's this whole issue of what they call regulatory credits. And that basically means Tesla gets credits for the fact that it's making cars that are not polluting the environment, which it then sells on to, for example, competitors in the vehicle space. So those who are still making cars that do pollute the environment. So Tesla's not actually making cars that use fossil fuels, but there's a lot of other manufacturers, a lot of its competitors do, and that actually brings in a significant amount of revenue to the company, which is helping it stay higher than perhaps it should be if you just look at the car manufacturing side of the company on its own. But certainly, the carbon revenue stream is very significant, and they reported, I think, a 54% jump in that in 2023. So that's certainly helping to prop up the business.
So it's interesting when you put out your short for Tesla back in March. You mentioned about sentiment. Obviously, one of the key things since Musk has been working with the US administration, which is Marmite, I guess. Some people love, some people not so much. Europeans and the Chinese have been voting sort of with their cash. I understand that EV sales are up in Q1, but obviously in China and in Europe, Tesla sales are down. So, is that a trend that you can see continuing?
I think so. I think certainly in Europe, European sales are down in pretty much every single European country. In the Scandinavian market, they're down 50, 60%. And this is at a time when overall electric vehicle car sales in, say, the Nordic region are up. So it's a massive reversal for Tesla in the European market. Surprisingly, there is only one European country where sales of Teslas were up in Q1, and that's the good old United Kingdom. But everyone else is not buying Teslas like they used to, which is probably going to create opportunities for other electric vehicle manufacturers, including, I suspect, some of the Chinese names as well. So I'm starting to see more Chinese electric vehicles on the roads here in the UK, and I think that's a trend that's going to continue.
So with the Chinese names, we had an interesting conversation yesterday about this. I'd be interested, sort of, to share your thoughts, or for you to share your thoughts with our audience about sort of where you feel sort of the Chinese competition could catch up and sort of take over Tesla with sort of all the robo taxis and everything.
Well, I WhatsApp some fund managers on a regular basis, both long only guys and hedge fund guys, to get their thoughts. And this whole robo taxi issue is something that everyone's pretty focused on at the moment. I think a lot of people who are still bullish about Tesla at, say, $250 are bullish because they're expecting Elon's going to pull the rabbit out of the hat with robo self-driving vehicles. And if you look at the transcripts from the earnings call, that's really what the Tesla management team is wanting to tell shareholders right now is, this is coming. We're going to be first mover. It's going to be a game changer. Everyone will want to buy Tesla again because we'll be the first ones with these kinds of vehicles on the road. As I think I mentioned in our call yesterday, I'm still scarred by DeepSeek and the fact that the Chinese tech sector can deliver equivalent tech at a much lower price point in an entirely unanticipated way, which tells me that the Wall Street tech analysts are not really paying as much attention to what's going on in China as they should be. I think a lot of people who've never been to China or East Asia underestimate just the momentum of technological innovation in that part of the world. And there are Chinese companies working on this tech too. If they develop it, they immediately have a huge domestic market they can roll that out into straight away. And I anticipate that when they do, it's going to be at a lower price point than Tesla, and that's the big challenge for Tesla right now.
So lots of headwinds coming in. The key question, Stuart, is how do you still feel about Tesla right now? Are you happy with your short?
I'm still happy with my short. I mean, some of the factors I raised in my original article have been resolved. Elon Musk is stepping away from as active a role in the federal government than he was previously. I think the damage has been done as far as the Tesla brand in Europe is concerned. I think that's something they're just going to have to struggle with now, trying to get back to where they were. I think they may never do. I think the tariff situation, Trump is obviously beginning to try to alleviate things for the auto sector. So it may be, if the US and China can get out of this tariff standoff, then that will be good news for Tesla. If they can't, it's going to be bad news. And I don't think that's been properly priced into the stock yet. I think this whole solar credits green credits gig they've got, that's a massive shot in the arm for the company. It's certainly keeping it going. So the more of that they can do, the better. Still a lot of Tesla fans out there in the US market, still a lot of fund managers with Tesla stock, but a lot of them have taken a big hit in the last 3 months. If you looked at top holdings of a lot of UK investment trusts, for example, Tesla was in there in the top 5, and I don't think they've been able to sell out of that quickly enough or reduce their exposure to Tesla. So that's translated into a hit in their performance as well. I'm talking to wealth managers, family offices. There's a definite feeling in Europe of reducing overall exposure to the US economy and US assets. And I think that's going to include these very large positions in Mag 7 stocks that a lot of funds have been holding up until recently, certainly outside the US. So, the buying in Tesla stock, a lot of that's probably coming from domestic US investors who are keeping the faith. But I think a lot of foreign investors are trimming their Tesla positions at the moment, if not getting out of them altogether. So, I mean, we said $200 in our original piece. I think there's still scope for it to get there, but it may just take longer, in sort of mid to long term, by the end of the year, perhaps. If they can make the autonomous vehicles work, I'm dubious, but if they can make that work this year, that would be a game changer for the company, and then we'd probably have to close that short position at that point.
Yeah, I think they've got Model Y, the Model Y coming out in June as well. So whether that sort of makes a big difference, I guess that's an unknown until we see sales for that. But thank you, Stuart. That's great to get your insight, and thank you everyone for listening. If you've enjoyed the podcast, feel free to subscribe and give us a like. It all helps us to build what we're doing and grow. So thank you very much.
Thanks a lot.